Good afternoon, YouTube. It's time for the afternoon update. My name's Max. My little black dog's name is Jackson. He's a mix between a black lab and a border collie. Just as sweet as can be. He's sitting right here next to me. He's my co-host. And let's check out the market, see what happened today. Boy, today was a lot better than Friday, wasn't it? Today was a lot better than Friday, no doubt. No doubt, up 2.1% today. Wow. The model portfolio was. Okay, well, that's great. That is great. Let's look at the market. I was just checking out some cipher mining. This thing's insane. We're going to have a little talk about cipher mining. They Blocks did a hedge in them the other day. We'll see how it's working out for them. Man, cipher's up in the post market. Nothing could keep these stocks down. Okay, so let's just start with Bitcoin. I probably just ought to start with Bitcoin. Bitcoin seems to be the only risk asset that matters anymore. All right, so let's do this also. Let's zoom out a little bit so we can look at the volume and kind of see what's going on. All right, this is the 30-minute time frame. The 30-minute time frame was really comfortable doing business down here at 109. In fact, that was the point of control for the whole chart. And sure enough, the other day we came back and just about checked it. So I'm looking to see if we can get through this 118 area. This, 117, 119 looks to me like there might be sellers there, especially the first time, but we'll see. All right, so now let's check out the SPY. I need to just start looking at IBIT instead of Bitcoin, probably. I don't know. Bitcoin still controls it, but okay. So look at this. I'm gonna have to zoom in so we can see what happened here. So this wasn't really a gap because the market was open, but it went through this. The bar went through this time frame so fast. The idea was there's probably other people up there that didn't get their order filled. And that's called it's called a fair value gap, but it means when there's only one, when a bar has only one time frame, there's no overlap. Like today, if you ran a straight line through 663, it goes through 1, 2, 3, 4, 5, 6, 7 bars. If you run a straight line through this one, on a daily basis, it just goes through one bar. Well, that's called either a fair value gap or it's also called a single print. Is it a single print? Gosh darn it! I used to be good at this stuff. Anyway, somebody tell me in the comments. There's a thing that's called single prints, I think. Anyway, it just means we'll talk about some other time. All right, single prints can work like a gap on a chart that doesn't really gap because it can look and see where people maybe didn't get their orders filled that wanted to. But back on that last one. Did you guys see how it looks like right when we got back inside there? Hang on. When we got back inside there, and we did a couple of time frames, just touched it or whatever. There was sellers there, at least so far. We'll see. Now, one way they could get through this is by getting through it at night. Maybe then the guys at night can open us on the other side of this, and that'll negate it. But anyway, we have to deal with this right here before I'll get back to being a perma bull. All right, now back to the Qs. The Qs had a similar pattern today. They had a fair value gap. It goes from 602 to 606, and sure enough, price got inside of there and kind of traded sideways. So we'll see how it reacts to that tomorrow. But then as far as all the yield max type stocks, the yield max underlines NVIDIA, Amazon, Tesla, Coinbase. Well, Coinbase was actually down a little bit, but all the other ones were up. Okay, so now let's check out the crypto quartet. The crypto quartet. All right. Alti, look at this baby. Looking good, up 2.07. We'll take it. The average is up 5.7, but that's fine. I'll take 2.7. What's even more impressive is my entire model portfolio was up more than 2%. So it wasn't like Alti was up 10% and brought everything else up. Alti was up 2%, but so was a lot of other stuff, obviously, to make an average of 2%. That's good. I'm glad to see that. Look at Rigetti, up 25% today in materials processing or whatever the heck this thing is. It's rare. I think it's rare earth. Up 21%. Anyway, great job, LFGY, for having this. Remember, LFGY has partially, it's partially uncapped. Let's look at that and let's see what they did. Or let's hope they were uncapped. They may get caught with their pants down here. Oh, shoot. Okay, you got a Houston. We got a well, we don't necessarily have a problem. LFGY has this. Let's see if LFGY does not have an option position in MP. Wait, is that right? Well, they don't have an option position in MP and they're just straight long. They do have a stock position in MP. Well, that was ULTY. Gosh darn it. I hate when that happens. Okay. Let's go to ULTYs. Let's go to ULTY. Man, I hate this freaking spreadsheet. I just need to trash this freaking thing. You guys, I don't hate this one as much as my lightning. The lightning spread one, it just needs to be trashed. It's just absolutely trash. All right, that's Alti. And I was trying to show you that since I thought it was LFGY, that LFGY is partially uncapped. So I was going to look where the spread was. Well, it's not LFGY, it's Alti. Alti's fully capped. They still made money on it. They could have rolled it 2 or 3 times. Who knows what they did? Doesn't mean their upside's capped, but it means the upside of the trade's capped. Anyway, so now if I could ever find LF freaking G, we can check it out too. All right, so here's LFG, which did even better than Alti, which is amazing. And these guys don't have MP or Rigetti, but they do have HUD 8 was up 17%. And now these guys are partially uncapped due to the spread above the strike of the second option. Anyway, all right, well, great job, LFGY. You got to love that. Sure wish I wouldn't have sold all of my LFGY. Anyway, I sold it for blocks. Let's see how we're doing in blocks. I sold it for blocks, WPay, and QLDY. So let's go over here to blocks and see what kind of shape I'm in. All right, well, 2.7%. Looks like I didn't do bad trading it in for blocks. The average fund in blocks was up 4.5. Blocks had Cipher mining, which was up 19%. Was everything up 20% today? MP, Cipher, HUT 8, or was it Mara? Something on the other page was up 18, 20%. Yeah, well, HUT's up 12. Okay. Cipher's up 19. My Lord. Hodl wasn't really down. This thing's still messed up. I'll never understand that. I'll never freaking understand why that doesn't work. It's how freaking hard is it to give me a freaking price? It's Hodl. I mean, it's not that freaking hard. It's not down 15%. I don't understand why Google has to be so bad. It's actually up. Hodl's actually way up. Anyway, so I need to just, like I said, I need to just delete the spreadsheet. It's almost, it doesn't do any good to even show it because it's wrong on a daily basis. I wonder if FBTC was really down. That I'm don't think so. Why would FBTC be down? That's ridiculous, right? FBTC is not going to be down. First Trust, Bitcoin Trust. No, of course not. Man, that spreadsheet makes me mad. I literally just need to delete this spreadsheet. All right, well, let's go look at something else. Or I guess we need to look at Salty. We probably don't want to look at Salty. Half the stuff's probably wrong when we do look at it anyway. All right, well, but just for the people that have it, it was down 1.8. The average stock was up 6.2% in their portfolio. So it's not bad that they didn't lose 6.2. They only lost 1.8 because it was a hedged short. So that's actually a victory for Alti there, but especially because they were short Bloom Energy, which was also up 25%. Everything was up 20% or close to it. Bloom, materials, everything. All right, so that's Alti, or I'm sorry, that's Salty. Now let's go back to the synthetic book. I think MP is part of the synthetic book, right? No, it isn't. Stock positions. Let's see what Alti. Now, Alti actually on stock, it's 3.76 of the portfolio. Anyway, they're doing a great job, Alti. All right, let's go look at something else. Let's go look at the index buffer report. The index buffer, all right, queue up, go figure that. I'm sure that quote's not right either. Google just sucks. I mean, this every time we look at queue up should be up. It's not up 16%. Come on. No way, right? That's another one that's wrong constantly. It was up 16%. Okay, well, they got that one. So Google's like 1 out of 5 this afternoon from the ones we looked at. They missed all the ones except queue up. All right, well, queue up is 16%. My apologies, Google. My apologies. You can't do anything else right, but you sure did get queue up. Anyway, man, that's impressive. That's impressive. An ETF that's up 16%. Look how bad it beat the triple Qs. That's its benchmark, is the triple Qs right there. It more than doubled the triple Qs. Oh my gosh. This is my favorite leverage fund. It's becoming my favorite leverage fund. Anyway, all right. So look at YSPY. Maybe YSPY is actually my favorite leverage fund. Or Blocks. Blocks is leveraged, even though it's not advertised as leverage. Anything that does a lightning spread is partially leveraged, slightly leveraged, structurally leveraged through the leverage between the strikes of the spread. It's double leverage. The Blocks is double leverage between the spread strikes. So anyway, but of course, WPay is also 20% leveraged, 20% per week. And we have YSPY is leveraged. The better ones are starting to be leveraged. I think that's kind of a sign of the times. SVOL and ZVOL both outperforming. Also LFGY also outperforming, as is Blocks, as is GPTY, which I still hold. That's now my second biggest position. Well, actually, I hold half of it. So that's how I got WPay. I sold half of GPTY to buy WPay. But anyway, and I think that's a pretty good trade-off. WPay, for some reason, isn't on here. It should be. I don't know why it's not on here. It darn sure ought to be. Right? I mean, this is what we look at every day. WPay, would you call that NASDAQ? Or I'd call that NASDAQ, closer to NASDAQ. Let's put it right next to the one we compare it to, because I sold GPTY, similar stocks as GPTY. It's really similar to YMAX. We'll put it down here between YQQQ and YMAX. But it'll be on the report tomorrow. And We also need QLDY on here. I think I do have, yeah, QLDY is on here. It was up 1.73 today. That's not bad. NASDAQ was up 2.1. Another day and it outperforms the NASDAQ. I don't know why that's happening. I don't think that should be happening. But maybe we can get the trader on here to explain why it's happening, or maybe if I can make a spreadsheet worth it, darn, we could actually figure it out. It's just math. My QLDY spreadsheet just sucks so bad. It's probably the worst thing I've ever done. I'm literally going to scrap it and just start over. Just have AI do something, but AI is not that good either. I don't know what I'm going to do. My QLDY spreadsheet sucks. I have till 9 o'clock tonight to figure it out. And that lightning spread show is becoming one of my biggest shows. It had 208, and it sucks. It's the worst show ever. But it had 208 subs last night, or views last night. These shows right here have, get 30, 50, whatever, in the afternoon. So anyway, I need to start taking that show more seriously. I've got to get a freaking lightning spread, some lightning spread content where we can compare it to the Qs and see exactly how it's doing. It's not brain surgery. I used to be good at all this stuff. But anyway, AI is making me dumb. Jackson, don't even start. I don't want you to start. It's probably just the mailman. You don't even have to start. The other dog's got it under control. Anyway, okay. Back to, but anyway, WP be on here tomorrow. And we can see it was one of the outperformers today, which you would expect. It should be an outperformer almost every day. It should outperform by about 5%, because if it's 20% a week leverage, it's about 5% a day. So typically on a big update, we probably ought to expect a little bit more out of WP. Anyway, okay. Well, that's great. So now let's look at the yield max buffer report. Look at Palti beating the parents, SMCY beating. Look at all these beating the parents. That's not supposed to happen. That's because of Jay. That's because of Jay putting in the cover call spreads. But then it's also because of Scott executing the trades and Scott's team, moving the strikes far enough away, or moving the, it's not only just putting in a call spread and that solves the problem. How far away do you put your short? Do you put your short 2 strikes out of the money or 3 strikes out of the money? And then how far above that do you put your long? Anyway, we could see how it ends up on days like when there's giant bounce backs, if they're capped or if they're not capped. And as a company, they look to me like they got a lot of upside. Look at Snowy got all the upside. Dizzo got all the upside. We have some, GDXY was a more typical result, as is XOMO. But then we have Fibby getting more than all the upside, YMAG getting more than all the upside. Alti, this is a great day for yield max. Well, look at this. All of them catching. There's just like owning stock. They've got the system hacked. They've got the system hacked. Where they're trying to basically, they're trying to give you the performance of stock and still give you a dividend. Look at AMD. Now, some of them, had buffer like they typically do. AI exhibited some buffer. It was, in other words, probably capped. Probably maybe they didn't do a good job on that one. Maybe they put it too close, or maybe whatever. But the results are pretty impressive here. That's one of the more impressive days that I've seen them do. All right, so now what do you guys want to talk about? Did you guys do any earnings trades? Yeah, the banks were closed today. I know that. Hey, B-Dog, WPay's looking juicier. Yeah, I'm glad I got it. It's been like 12 days. I've had it for 12 days. Howdy, howdy, howdy. What's up, SB? How you doing? That's SB's burner account, because I don't think his normal one says SB Trader, U9V. He has a normal one, but that's his burner account. I'm just joking. I don't know. Hey, Marcus, there's Marcus right there. Skeptic, Froggy T. White. How you all doing? And we're doing good. There's Tommy. Dividend Degenerates here as usual. Thank you. You've turned into a regular Dividend Degenerate. I appreciate you. Soundhound and Big Bear AI ran today. I made a good profit and sold nice little trade there. Got in, got out, paid yourself, hopefully. Going to get some robotics on the next dip. You notice no distribution. Oh, yeah, because the banks were closed. Most banks were closed. Hey, Max, you got 3,000 views. I know it. My KYLD video is good at turning into probably my most successful. Probably, though, my most successful video that I remember doing in a while was the one where I said I sold Yield Max. That one just, I don't really look at views, but I think that one got a lot of views. But yes, the the killed video, and you're the one that gave me the idea on the thumbnail. I cannot believe I didn't come up with that. I'm usually good at things like that. That's usually the kind of stuff I come up with, but Marcus put it in the comments. This is going to kill Alti or something. And anyway, all right. Just do what there. What are you talking about? Tommy, you're saying just trade, POTUS, true social post. Yeah. I know it. I just wish I had advanced knowledge so I could have got short, I wonder if noon's the time they do stuff, because the last time it was at 12:05. It was 11:05 my time, but the tweet was at 12:05, and I bet they tell their people, "Hey, you got to get your Bitcoin shorts on before noon, or the chief's going to make the announcement at noon." Anyway, I wonder if I'm going to start looking. It seems like I wonder if they have it time. So at least if you make it past that time of the day, it's past the crash the market time of the day. Anyway. Yeah, no, he doesn't, Froggy. He means KYLD, and that's a good, let me show that to you. Maybe Froggy hasn't heard about KYLD. KYLD is, or what, KLDY. Maybe he typed it wrong. Which way did he type? Gosh darn it. KLYD. No, KLYD, right? It's killed, KYLD. Well, it's just not on here yet. It's because it hasn't. Yeah, of course not. It hasn't. It's not public yet. What am I thinking? But I hope it comes. I hope it gets on here soon. There's Summit. What's Summit have to say? Oh, he's just weird talking. Someone gave me a video to watch, and I was watching it. Kind of a new guy. Yeah. What about Wi-Fi? I looked that up the other day because I saw that, Tommy, in your comments. You left me a comment and said, "Check out Wi-Fi." And so I think I did check it out. And I think, of course, I think everything's a ticker. So I think I put it in here. I didn't think I forget what I found. I don't think I found anything. Oh, white fiber. Wow. Okay. He doesn't pay a yield. I usually just talk about the ones that pay a yield, but we talk about growth stocks too. 141% year to date. Wow. Here's the funds it's in. It's in SCHA, which is small cap Schwab, VTI, which is a good one, Vanguard Total Market. What's Node? Oh, Node, that's a cool name for the on-chain economy. I hadn't heard of that one yet. This is a good way to find new funds by finding a stock you like and go up here and see what other stuff is buying in. And sometimes you'll find a fund you haven't heard of. I found one the other day like that I never heard of, and it was a good one. Anyway, okay, yeah, no, that's a good growth stock. That's a good growth stock with look, they even had earnings already. Looked like they IPO'd at 25, sold off the first day, and what a great opportunity that would have been. Yeah, good. Thank you, Froggy, or whoever it was that whoever that was. It was Tommy. It wasn't Froggy. I'm getting my, where in the hell is this stupid freaking, all right. Yes, Froggy, that's the new Curve ETF coming out. Yeah. And it's going to, they're hoping it's going to compete with Alti. Who knows? Alti's doing so well. I don't know that anything can compete with Alti. I mean, yeah, I really don't know. I'm always calling for blocks to be $1 billion fund. I don't understand. I've been in love with blocks for a couple of months, and I predicted it's going to be $1 billion when it had like 10 million in it. And the only thing, though, and I've been thinking about that, the only thing that's maybe getting away with maybe it won't be because the yield chasers won't buy it. It's 30%. 30% is probably not enough yield for a yield chaser. They'll probably still stay in Alti. So maybe it won't do that $1 billion. But I think it's just, the reason I'm saying if Alti can be $3 billion in assets under management, this is every bit as good, if not better or different, but better in its own way. It's equally as hedge fundy and awesome in my eyes. Now, it may not be in everyone else's eyes because of the tiny little 30% dividend, but in my eyes, it's every bit. So I just can't believe it wouldn't be at least $1 billion. If Alti's going to have $3 billion. And Alti will probably come down, of course, when the market comes down, but hopefully that won't happen for a while. All right. You reinvested into BITK. That's good. That's good. You live off of them. Great job, Blackwater, which I don't. I'm trying to catch up with what you guys are saying here. Anyway, it's fine. If you have anything that I need to look at, just put Max. And so I make sure I see what's y'all's opinion on Yield Max making these. Oh, yeah, 12, 25, and 20% target funds. And Defiance has a 30% target fund. And I mentioned in my morning show, I have a friend I talked to last night. We have guys night on Sunday. We eat steaks. And as one of the guys that always comes to that, he has Alti and he has he has triple QI, and he's real happy with them. And said they seem to, he's real happy with them. Anyway, he's getting ready to use them to buy a car. You don't care for any distro under 100. That's fine. Yeah, no, and a lot of people don't. So maybe that's the flaw in my thinking. Maybe blocks never will be $1 billion just because of that, because it won't attract the crowd that would otherwise get it, but doesn't mess with anything under 80 or whatever. So no, that maybe I was in other words, I'm saying maybe I was too optimistic about blocks. Maybe no matter how good I think it is, maybe it's because of that. Maybe it won't get there. YouTube just changed their video controls on the desktop. Really, I'll check that out. The play button, volume button, and setting buttons look totally different. Okay, well, let's go cover that. There's nothing else going on this afternoon. Maybe we'll look at an earnings trade or something. Okay, well, now let me refresh this. I bought myself Perplexity for the Perplexity Pro for my birthday, and I'm so happy with it. Perplexities or Claude or whatever. I use Claude a lot, and you guys have probably seen it. I mean, you've seen my stuff before, and it's making my stuff a lot better. But I'm always running out of time and stuff. But Claude's amazing. I tried to use Gemini today, which I also subscribe to, but I think next month I may cut my Gemini. Although Gemini does help me with the Google spreadsheets and stuff. I don't know. I'm getting disenchanted with Google. I'd love to get out of their ecosystem if I could. Anyway, okay. I don't see it doesn't look any different to me. Anyway, but maybe he got an update that mine hasn't. So that's fine. All right. You guys want to look at, let's do this. We've looked at the Crypto Quartet lightning spread report. I just hate looking at that spreadsheet. We're going to skip that one today. But let's look at this. Let's look at this really quick. Okay, so let's check out the most recent. Let's check out the newest funds and see how they're doing. So I just sorted by inception date. So remember, my funds you have to have been out for 3 months to make this list. If you guys see anything that has been out for 3 months that's not on here, tell me about it so we can put it on here. I found a couple today. Gosh darn it. I found a couple today that aren't on here. QQA and RSPA. Have you ever heard of those? I bet you Marcus has. And maybe some other of you guys, but they're kind of a little bit more obscure. Anyway, but let's look at these newbies. So this is the newbie list. So the babies. Look at K-Gold, 10.56% yield so far. Just been here since July. Very unvolatile, very stable, in other words. Quarterly NAV return 20 or 18%. That's amazing. And look at blocks. Would you take a look at that? I mean, 28% with a 14% NAV return. I mean, at this rate, it's going to make 56% on NAV. Plus, so what if it only pays 30 on yield? Okay, so that's going to be a total return of 56 plus 30, 86%. That might beat Alti's total return. Nothing against Alti. It depends, but nothing against Alti, but just because blocks is more focused on NAV return, or their blocks is going to get more upside than Alti and also more downside. If you knew the market was going to go parabolic, you could be in blocks. If you knew the market's going down, Alti would be safer. Although neither of them would be pleasant on the downside. But anyway, IAUI is a new one too that Susan told us about. I don't know if she's here today, but thank you, Susan. BCCC is a good one that somebody told me about. It's from Global X. This one, for a new one, look at this, paying a 36% yield, which is a lot for Global X. Now, it is a 27 vol, but for a Bitcoin-based fund, that's not too bad. Quarterly NAV return's not doing great. But anyway, then we have CO2. I know a lot of you guys like that one. Coinbase pulled back this quarter. That's down 25% this quarter, but it's paying a 55% yield. Volatile as heck, of course, as is MS2 and TS2 and NV2. NV2 is the least volatile of the bunch. And out of the bunch, really, TS2 is up the most, 20% NAV just this quarter. NV2 is about 5% NAV just this quarter. They're both paying between 30 and 40%, just killing it. NV2 and VYY. But anyway, this is the new crowd. We have a good new crowd. So let's see what the top 20 J ratio is. This is a new metric. The max factor measures potential. This measures expended energy. The max factor measures potential energy. This measures excess. Maybe this could be called heat, and the other, I don't know. The other one could be called. I need to think of some type of way to describe better. But anyway, so what this looks for, of course, it looks for the best risk-adjusted reward you can get when, factoring in the volatility. How much risk-adjusted reward can you get at a reasonable price? This is risk or income at a reasonable price is what I call this. They used to have stocks called GAR, growth at a reasonable price. I'm trying to do a similar type thing for income. Maybe I'll call this the income at a reasonable price. Anyway, these are the ones that have performed. And this could also be called the ones that are the most overextended, or this is the outliers. These are the ones that are surprising the most on the upside compared to what the statistics say they should do. Anyway, so it shouldn't surprise us. GLDI and iGold. I mean, GLDI, look at this. It's only a 5.9 vol, but it's up 14%. Well, 5.9 vol, but forget about 14% yield. Who cares? But it has a total return of 20%. So, it's making 5 times its volatility. Maybe it's overextended, because remember what I'm always telling you, when something has a standard deviation of 10, it means it's a good year, like the SPY does. 10 or 15, it means in a good year, the SPY might be up or down 10 or 15%, and it wouldn't be surprising at all. It'd be totally normal. 100%, 1,000% normal. Okay, well, GLDI should be up or down maybe 6, 7%, maybe 12 in a real outlier or whatever. Well, right now it's up 22%. Maybe this is just the outlier index. But anyway, then we have iGold. It's also outlying. We have SLVO also being an outlier. PLTY also being. Now, here's another type of stock. This one has a 48 vol, meaning it's totally normal for it to be up or down 50% in a year, and even more than that. The SPY's vol is a 15, but at the SPY's vol is a 10 to 15, but if the SPY's down 20, you say that's kind of a bad year, but it's not out of the realm of possibility. If the SPY's up 20, yeah, it was a good year. So by the same token, this one could easily be down 75 or 80% in a year. And it wouldn't be, statistically, it would be, just kind of par for the course. So just keep that in mind. Anyway, right now it's rewarding investors by being up 125%. So great job. But then we'll round out the top 10 of the outlier list. Then we have ItFly, CLM. Look at CLM on the outlier list. I bet that'll make a lot of you guys happy. This is a what have you done for me lately list. Everything on this list has been printing money, especially compared to what you would expect it to do. It's just outlier, maybe a better way to look at this metric. Anyway, NFLP, IDEVO is on the outlier list. I guess, the outlier list factors the volatility so that, it's not very volatile and it's been killing it. CEFS is on the outlier list, number 9. And then we have Riser. I love Riser. It actually profits when interest rates go up. It's a fixed income fund that pays about 5 or 6%. but it's reverse correlation. Most fixed income funds make money when interest rates drop because the prices of bonds go up as interest rates come down. Most fixed income plans that aren't option related, they buy bonds. So they need the rates to go down, or the rates go down, it gives them a little tailwind. Rates go up, it gives them a headwind. Well, Riser, and this is Mike Venuto, and this is his baby. I mean, he was really proud about this. This is when I met him, I didn't ask him about yield max. This is the first thing I mentioned to him. But also I think then he realized I was serious about, that I knew what I was talking about when I asked about Riser, because all the other influencers were asking him, when are you going to go to weeklies? What about the erosion? But I wanted to know how the heck, I said, how could you even do this? I want to know how they can do a fixed income fund that doesn't, that's not sensitive to rates, that's reverse sensitive. So in other words, this would be a good one to be in if you thought rates were going up. And that's not what we think right now, but for whatever reason, it's been outperforming. Anyway, so that's the new metric. And then the MOX, the MOX factor is just, these are the ones that have potential. They may not be doing quite as well as those other ones. They may not be having an outlier performance yet, but they sure have the potential. And of course, we have Alti, Fiat, USOI, TSYY, which I'm hearing good stuff about TSYY, IWMY, Triple QY, WDTE, Gold Y, YMAX, and Misty. I was kind of surprised Misty's on this index, but well, I don't know. I mean, not really. I mean, it's, even though it's volatile, it rewards you for its volatility with those big payments, or it had over the past year it has, but I mean, the payments have also been coming down, but the price has too. Anyway, hopefully Misty will have it stay in the sun soon. All right, so that's the MOX factor, and then it's going to call one the MOX factor and one the, I don't know. I need to work on my branding. Here's the short-term max factor: TSLP, iGold, TS2, KGold, Silvo, GDXY, Goop, AMD, GUI, TLTW. It's a good one. And here's the long-term max factor: Palti, Tesla, TSLP of the same stocks: Snowy, GDXY, InFlight, Goop, AMD, Silvo, and iGold. All the same stocks. So that's your max factor report. So are you going to sell half your, okay, I may do this tomorrow, but let's see, you're going to sell, yeah, WPay is crushing yield max total return, but it's partly because the market's been up. And WPay is not going to pay as much yield. So that's the yield's the tax on the upside, and YMAX pays that giant yield. So yeah, WPay is going to continue to crush YMAX at total return, especially in a bullish market. In a bearish market, it'd be the opposite. YMAX would do a little better, in my opinion. It would be close. I mean, they're very similar. Good competition for each other. So what are you thinking, Redfish? You're just gonna wait till tomorrow and then selling half your YMAX. Yeah. I think when I first got the model portfolios last December, and well, no, wait, I'm trying to think. No, Alti was out. I got Alti right off the bat. But there was something I couldn't get. So I got YMAX. That's right. I got YMAX at first. And then but LFGY and GPTY and those weren't out yet. And then I really liked those. And then when the April sell-off looked like it was going to happen and I tried to reallocate, I cut all my YMAX because YMAX wouldn't have done well in the April sell-off. Well, and then I put some inverses in, waited for the sell-off to be over. But then when I never replaced it. I replaced YMAX with GPTY and LFGY and GDXY, and those three. I know GDXY is not the same, but basically I replaced YMAX with GPTY and LFGY, and I was real happy with it. I still have a few shares of YMAX, and YMAX does good. I mean, does well also. I like the thought of YMAX. I like the thought of it. Okay, Marcus is saying what won't last in the bear market. Oh yeah, the same thing I said, that what WPay is crushing YMAX at total return. Yeah, in a bear market, I think that'd be the opposite. Yeah. I'm stuck on a half and half solution also. There's something I have right now, and yeah, it's GDXY. It's GDXY, and I just don't have the heart to dump all of it. I'm thinking about just doing half of it, maybe half of it this month, but I do want to take some of those profits off the table. All right, so what's SoCal Steve up to? He was deep in WiMAX. I see he's selling some WiMAX for WPay. WiMAX, if you're a believer in the yield max, WiMAX is great because it has all that built-in diversification. I mean, I don't care that you have Murni. Murni may turn around someday, so you have Murni, but you also have Palti and NVIDIA and the good ones too. So I like the idea of WiMAX, but I just thought the GPTY and LFGY for my money did a little bit better job. But yeah, WiMAX is fine. WiMAX is really good. Yeah, and Flies Weekly now. Yeah, WiMAX has been good to me, but I see WPay doing better. Well, remember, but you're gonna lose some of your yield. I mean, that's the reason WPay is doing better, because they're paying you less yield. I mean, and for even if it wasn't for the leverage, WPay would be doing better because they're paying half the yield. That's just the way it is. And then you add that on top that they're also, and they might not be quite half the pay. I'm not saying WPay is not paying a good yield, but yeah. And then you add in the little bit of leverage. Yeah, I'm not either, Froggy. WPay is kind of a mystery because they're the only ones that are out there saying we aren't selling options and we don't care. We're just going to sell stock. And I've tried to simulate that, and I don't really have the answers. So far, they seem to be doing well, but I don't have any idea how to do in a down market. You own 18 high yield ETFs? Yeah, I do too. So I know all about it, and I follow. Look at this. I love how this list. Now we can look at anything. I need to build a search function in, like I've talked about forever. Have a search box. But next time you guys ask me a question, Marcus says, "Hey, check out," or here's one. Check out this one. Let's go the old ones. What about QQQX? So somebody says, "Hey, what about triple QX? Do you have any of that?" And I'll say no, but we can see, well, it's been around since 2007, paid an 8% yield for all those years. I mean, that's really good. It's a 10 vol, so that's very similar to the SPY. SPY trades between 10 and 12, 10 to maybe in this, the Qs are maybe 10 to 15, 12 to 15, something. Anyway, it's only up 3% for this quarter. Let's see what the heck triple QX is. Had anyone heard of double QA also? I saw the manager speaking on CNBC is the reason I thought about double QA today, but all right. So this is a Nuveen dynamic overwrite fund. Wow. Now these guys have some record. A track record. So 8.2% CAGR for the year. They don't really show CAGR, but so it's 23% for 3 years. So it's about 7 or 8% a year is what they're running. Their 5 years not really running that well, but that's because of 2022. On the 10-year, they're running about 5%. Anyway, but that one's been around for a long time, paying about 8%. I'm really kind of interested in this one because I saw the fund manager talk about it. You guys have heard about the RSP, right? The RSP is the equal weighted SPY. You know how the SPY is market cap weighted. So as NVIDIA and Apple grow and Amazon, as they grow in size relative to the whole economy, that's how they set the size. So if, NVIDIA's, 8% of the index or something, it's 8% of, it also means that it's outgrowing the other things in there. Well, some people say, well, that causes concentration problems. And that when you get too concentrated, you're foregoing that diversification. So they come up with the RSP, which is the parent fund for this. And RSP is equal weighted SPY. So they own all 500 stocks and equal weighted. So what is that? 0.2% a piece? It's whatever 100 divided by 500 is. and every stock gets that much weighting in the index. So, what that does for you is it gives you an ETF that doesn't do as well in an up market. Its concentration is an enhancer in an up market, but it's a detractor in a down market. So I was thinking, well, what would be cool about, I wonder if somebody could take this RSPA, which is paying a 9.3% yield. They're selling covered calls on the RSP, on the equal weight. So you get away from the overconcentration in NVIDIA and everything. But I wonder if a good strategy might be, and I need to go back and back test this. How old is this? Well, it's only been around since July of 24, but what I probably want to do in Portfolio Visualizer is go back a year and see how a person would have done. Because the only knock on, say, YMAG or say Maggie or MAGS or YMAG, any of those MAG 7, funds is it's just overly concentrated in the whole, So a person could probably have, say, YMAG and 50% YMAG and get all that nice, get all that nice yield and stuff, and then hold 50% this, and this would kill your yield, because this is only yielding 10, the other one's yielding 50, but between the two of them, you would yield 30, but you should have a real smoothed out performance because you have half of this. This will smooth out this is opposite of concentration. This is unconcentrated. So I think that might be a good study for me to do. And I think that might be a good diversifier, kind of like I showed you guys Alti and T-Oak. And even though T-Oak just pays a tiny dividend, you put together with Alti and it beat everything, beat the market, outperformed anything I could find so far. I bet you that YMAG plus this one would also be a decent yielding strategy. What do you want to bet? What do you want to bet? I'll make some content on that, and then you guys can watch the show. And you can, if you don't agree with me, we can argue over it at that time. I knew Marcus would know about double QA, and Marcus probably told me about that before, but I forgot about it. But then I was watching, CNBC today, and they were talking about it. But yeah, I knew Marcus would know about it. All right, Redfish. So you did pick up some more WPay, NVDW, Hui on Friday. Oh, on Friday. Good job. Good job. Nice. That'd been a good day to pick up some stocks. So you put all distros into your fund of the week. Okay. And then you switch it around. I like that. I like that idea. I love those mechanical ideas. Or those, like when you gamify this, it's, I mean, in a good way, turn it into a, more like an exercise or whatever. Kind of like that queue up is gamified. Just think, okay, I'm going to take 10%. I'm going to go, withdraw $10,000 from the bank, and I'm going to send it to Tasty Trade, and I'm going to start buying. I'm going to use $1,000 every morning and buy an at the money call. And which is what queue up does. And if you hit a good series in the markets, you're going to make tons of money, but that's kind of a little bit of I don't know, game, but it's an aggressive strategy that kind of gamifies the system. Because what it does is that system right there monetizes trend, because when you get 2 or 3 up days in a row, because up days and down days do tend to group in the market, you get 2 or 3 up days in a row because you have a couple of big wins on an option trade where you're betting 10% of your account. You might double or triple your money easily. So on your first, if you get lucky, your first $1,000 trade, wonder if you make 3,000 on it. Well, all of a sudden your account has, instead of 10,000, you have 13,000 in it. Your second trade's 1,300. Wonder if you make a double on that and have 2,600 after that. You wonder if you have 5 or 6 winning trades in a row, and because what I'm saying is you're betting more every time. And then, of course, when you lose, the loser's big, but you can only lose one time in options, and you can win multiples. And this strategy is made kind of to win multiples. But yeah, triple Q or double QA does have a good expense ratio. HOYY is the only Granite shares. Is that? Oh, I forgot HOYY. That's Granite shares. So HOOY is Yield Max. That's the one I call Hui. but that other one would be Hawaii. Hawaii. But I always call HOOY Hui. So, all right. Marcus is just educating. Well, yeah, Marcus's idea is that double QA is like a protected version of triple QI. I would call, yeah, I mean, that's a good one. That's a good one. I was just thinking that RSP's a protected version of YMAG, but I could see that double QI is a protected version of triple QI. Yeah, it's a balance between hedging and appreciation. Yeah, all in one ETF. I only have one Granite shares, and it's YSPY. And I just kind of bought it to track it, and it started doing great. And so then when I rebalanced a few weeks ago, I added more. And I've been real happy with YSPY. Curve is the most stable. And the reason is because they pay the lowest yield. The yield is a tax on stability. It's a tax on the future upside of the market, of these ETFs. So the lower yield, that's why the lower yield ones are generally more stable. But yes, Curve is an outlier even amongst the lower yield ones because they don't pay that low of a yield. They pay less than some other companies, but more than a lot of companies, and they do a great job. I'm not dogging on Curve whatsoever, but that's yeah, they do a great job. It amazes me. You know, they don't have any more AUM, but I think once again it's related to the yield chasing element. 20, I think this is an all-time record for my 22. Holy cow. ZZ's here today. Hey, what's up, ZZ? You sold all your kill. Well, I'm sorry that didn't work out. Yeah, I know it. I've been disappointed. Today was another day. It did the same thing that it did the other day. I still have it. I'm not worried about it, but I'm glad that you're out of it. I'm sorry if you got into it because of me. I said everything I said about it in good faith, and if I figure out the other side of it, I'll darn sure tell it to you. But yeah, it was another day. It freaking, that it underperformed the market. I haven't got an answer that satisfies me yet. Lightning spread's so new. I'm not even sure they know it. I mean, maybe they do. I don't know. But I mean, the lightning spread is its own beast. Does Eggy have a downside? I've heard both ways. I think I've heard on Brad's show that they have puts or something. I think they can have puts, and maybe right now they do. When I did the initial review, it seemed pretty vanilla. They were doing covered calls, not even covered call spreads. And I did a review on it a long time ago. Let's just go look at FinViz and see. But I don't think so. Or I think if they do it, it's not. I don't think it's gonna be like Alti where they have all the downside, where they have it locked out as hard. There's Eggy, which is and then there's EGGS, then there's eggs, and this probably wouldn't show the puts anyway right here. That one's the total return. It does say return guard. When it says guard, sometimes it implies EGGS, prospectus, and holdings. Let's just go take a look at this. Nest yield. Well, hedging against market downturns. Oh, that's right. I do remember this. No, wait, they do have, okay. Or maybe they just, but now that I'm thinking about this, I think lots of people, when hedging against market downturns, they mean that the income's the hedge. And it is, but we're going to have to read the prospectus really quick. I've got really good at reading these. Let's just go straight to the strategy. We can tell by the objective. So the objective is current income, and it does have the secondary objective of share price appreciation. Okay, so let's scan down here to the investment strategy, actually ETF, blah, 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 blah. Subject to dampening. Okay. Well, also seeking to hedge against purchasing. Yeah, they do have puts. Well, wait, okay. The fund strategy involves two components: purchasing a portfolio of equity. Okay. Either real or synthetic, and it doesn't matter, so that's fine. 2, generating income while hedging against large stock market declines through an option portfolio. Okay, the equity strategy, but gosh darn it. That I don't want the holdings. I don't want that. Let's just, instead of that, I thought the prospectus would tell them, well, we're just going to have to look at the holdings. And I'm sorry if you asked about why, and then I slipped over to ask, but I'm more interested in the why is it's a yielding one. I mean, it's a fixed income. Maybe it has puts too, but anyway, so let's just, so I downloaded all holdings. So now we need to go get a spreadsheet somewhere. Make a new spreadsheet. We'll import that thing and we'll take a look at it. No. Import, not make a copy. Upload. Browse. Place data select cell. Boom. Here we go. Let's see what they're doing as far as puts go. Boy, Eli Lilly's been hot. They have some Eli Lilly shares. Okay, so let's go. See how they're playing this. I don't see any puts. I mean, maybe hang on. Oh, wait, I'm sorry, call put. There's 2 puts right there. I see 2 puts. Okay, so they own 170 Q puts. Well, that's a good thing to have puts on. So they're hedging they aren't doing callers where they're hedging everything individually like Alti. They're hedging the entire market. LFGY does that. GPTY used to do that, but hasn't been lately. But they have a market hedge on here. So, and then they also have a put on APP, and they own shares. So that's a married put. So they have AppLovin and can't lose money, or they can't lose principal below the put strike more than what they paid for the put, right? So they have a protected position on an APP. Now, are they selling any premium? APP doesn't have any short calls, but they have enough. They're selling premium in all these other ones that say call. They sell in Coinbase, SMCI. Wait, is that? No, I take that back. The only selling premium they're doing is just these negatives. So they're selling premium in Block. In Tesla, they got a call spread on. They have a call spread on. In Block or XYZY or whatever that one's called, or XYZ, they've sold calls. And they did sell calls on app. They sold 30 calls on app, but then they also bought okay. So app's just your standard. App is a caller. So it looks like they have app collared and they have Q puts. So yeah, it is protected. Okay, so that's great. So what I want to see is how protected is it. Let's just look here. Let's EGGS. This should compare favorably to the SPY. It's similar. Now let's go here. These guys, I happen to know when they premiered. I think it was right around the first of the year. So we'll go from the first of the year. Let's go from the first of the year to April 9th or something and see how we weathered the pullback, April 10th, whatever. I mean, maybe in a deeper pullback, the puts would have kicked in. But I mean, that pullback was only 15%. Right now, they're the 590 strike. Puts are really extremely highly priced on everything, especially on the Q. So they have to move far before the balance. You have to overcome the amount that you paid for the darn things. It looks like the hedge didn't really. I'm not saying it didn't work. Maybe without the hedge, eggs would have been down 30%. So I'm not saying it didn't work, but maybe their goal is to be just the same volatility as the SPY, which it looks like they pretty much are. So let's do this now. Let's look at. So let's look at eggs. I know when it premiered, so I can go find it by the date. That's a good hack. See, I told you it was around the end of the year. There it is. Eggs, Eggy, and EggQ, 27th, and 30th. This is because they were on my show right after that. Anyway, I didn't really get much good reaction. I didn't really have anyone saying, I love that. I can't wait for that one. I can't wait. But now people love it. So anyway, because I think Brad got people fired up on it. But I mean, I did my best, but I'm just not very good at that kind of stuff. I wonder why EGGQ just yields 5%. That's not very much. EGGS yields 11%. Anyway, what I came to look at is the volatility. So the volatility is right there. It's that 16 number. So that's a little bit more volatile than SPY, but not significantly. But yet SPY pays a 2% dividend, if even that, and this thing's paying 12. It looks like a great income vehicle. Let's compare Eggy and EggQ. I just can't believe EggQ's paid so little. But think about it though, that now I can, because look at this chart. Look how much extra upside EggQ's got. That's part of the reason for that is because they aren't paying out anything to the investor. That's part of the reason, and part of it's probably because they're based on the Qs, and the other one's based on the SPY. I just can't believe they can't pay more than a 5% dividend though. I'm kind of calling BS on that. I mean, who cares about a 5% dividend? I mean, I want to check it with another source because I'm not only do I not care about it, I also don't think it's right. EGGQ, Visionary ETF. Yeah, it says right here 3.7, but it hasn't quite been a year. So this thing is going to pay about 5 or 6 kind of. I mean, if you need a lot of upside though, and 5 or 6, gives you enough income, it could be the one for you, right? All right. Anything else you guys want me to look into? I'd be happy to, or talk about. Rex just declared what? Yeah, Eggy's good, Froggy. I mean, I didn't realize it at the time, but it looks like a good one. Rex just declared you're getting 26.45. Oh, for NV2. Okay, we're talking dividends now. All right, let me start up here with the ones I missed. Well, no, I was agreeing with you, ZZ. It didn't go up as much as the underlying, and it's making me mad too. You were the one that pointed out to me, and now I'm looking at it every day. No, I was agreeing with you. And I don't have a good explanation for you. And I feel terrible that you probably bought it because of me, and because I said something about it that didn't turn out to be true. And I take that stuff seriously. I hate that. I'm not going to rest until I get Mike Coe or somebody to give me an answer that satisfies me on it. We're maybe going to have to get Scott Snyder on the show and have to go over the trades or something, or get the guy that's running the fund, because no, it doesn't make sense to me either. So I was agreeing with you on that for sure, ZZ. ZZ, was it you or was it somebody else? Or somebody else's name started with a Z, and it may have been somebody else that was maybe going to do the just buy and at the money call every day and see how that works out. do the queue up strategy. I thought maybe that was you, but there's another guy called that just has one Z, and I don't see him in here. Anyway, okay, I will compare K triple Q and Eggy. That sounds good. Let's check that out. So EGGY and K triple Q. When we compare EGGS and K triple, well, anyway, okay, in the pullback, let's see what happened in the pullback. Look at that. Old Howard has a reputation for protecting capital and stuff, and they do a great job to the extent they're able. But I mean, that April pullback was nasty, and it darn sure hit K triple Q. But is Eggy the one with options, or I thought that was Eggs is the one? Let's see how Eggs did compared to K triple Q. But we would probably have to compare Eggs to something that's S&P based. What's a good S&P based one that everyone loves? SPY Eye. So SPY Eye protected capital a little bit better in the pullback. Okay, so now let's go look at, let's just go to right now on those same ones. SPY Eye and Eggs. Okay, you can see EGGS or SPY Eye did protect capital a little better, but it's costing you on the upside. Look at EGGS. And that's even after, remember, they have puts. They're paying for a put spread. And they're dogging SPY Eye, which everyone swears has no erosion. So let's do Eggs, but you wanted to look at Eggy, was what Marcus asked for. Let's look at Eggy versus K triple Q. Or no, you wanted Egg Q. We'll look at all of them. Eggy's beating K triple Q and protected capital better. And Egg Q, same thing. It didn't protect capital quite as well, but is beating K triple Q. Well, those are good ones. I missed the boat on that one. I should have been telling you guys to get that one instead of QLDY. Sorry about the bad call on QLDY. Like I say, I'm still in it, but I'm increasingly getting I'm getting curious about why it's not doing what it should be doing. What's going on? Froggy, yeah, QLDY. I don't think it's a bad fund, but I think that YY or ZZ makes a great point about it. And I'm the great person to make the point too, because I'm the person saying that it should get all the upside of the parent, and it should. I've tested it. I've looked at it on pluses and minuses. It ought to, and so the fact that it isn't, we need to figure out why. I need to figure out why. But yeah, it's. I mean, I'm fine with it. For you were just too early in Eggy Max. Yeah, stay on top of curve. I am. We're going to stay on top of curve. KYLD is the next super fund. We were the first person our station was the first person to have K triple Q on. The day it came out or the day after it came out, Howard was on our station. And he's told me privately before that he credited our station with a lot of the success that one had. And also Cy Katara, same thing with Cy Katara. We helped get T-Spy kicked off. Now, I'm not saying other influencers haven't taken up the cause after, but we were the initial ones on both of those. But yeah, I'm all over Eggy and Eggs. I'll stop. We'll stop. They're only monthly, right? Out of Eggs, Eggy pays the highest dividend. Yes, out of the Eggs, Eggy pays the highest dividend. Well, I need to make my dashboard here where I can sort by company. Now that I have Claude working for me, and I've got the max factor looking and working a lot better where I can sort it, and it's not nearly as frustrating. It's be pretty easy to make one where I can just pull. We can look at all the ones from a company and just look at those. I'll try to get that functionality to get going sometime this week. But yeah, that'd be great just to look at Eggy, XQ, and look at all of them in the max factor, and then we have all the metrics we need right there. But yeah, we could do it again. Actually, it's sorted by date, so we can look at it right now too. All right, so yes, yield is EGY. And maybe that's because of yield, EGGY, that's the yielding one. EGGS, I always think of SPY or SPX. And that makes sense. Something that's an S fund, like cheap, a lot of those funds pay, 10, 12, 14% that are S&P based, like GPIX and stuff. Maybe that's, and I think that only pays like 8 or 9 anyway, but that's, but like SPY pays 12 or whatever. So this is eggs is trying to be SPY. EGGY is trying to be, paying 23%, trying to be more techie, more like a FEPI, or more like a, something that pays about twice as much, more like a QDTE almost. QDTE doesn't pay much more than 23. It pays 30 or something. So I think that's more what Eggy's going for, to take a little more risk and pay a little bit more yield. And then EGQ, maybe quality over quantity or something. Maybe they're just going, I don't know what but on this one, it looks like they're going for maybe the most highest quality, so this one should get the most NAV upside of the three of them. And so let's look. Has it? Yeah. This one's got 8%. The other one's got 5%. And the one that pays the most has got 0. Like I always say, it's just math. That really, the distribution tells us all we need to know. The distribution and the dividend, it tells us how risky the fund is. It tells us how much it's going to decay, because that is the decay. That is that is it. That's not, there's no magic something. These don't recover slow and stuff because they're covered call funds, or they do, but that happens anyway. But the real problem with these, if you want to get to the root cause, is the big dividends. The big dividends cause the NAV to deplete. So let's see. Then so I was going to tell you guys, remember I was talking about getting LFGY because it wasn't available. And so I'm trying to see when it came out and how it's done. It came out in April. No, when did LFGY come? Maybe LFGY was available. It came out January 14th, because I initiated the model portfolio like a dumbass. I got feed in 5E because I like the idea of feed in 5E, but they just, to me, haven't really been performing the way I had hoped for. But so I invested here. But yeah, and so that's why I didn't get LFG on the first round. But man, I should have bought it the day it came out. Look at that, 64% yield. Or I'm sorry, 68% yield. 24% vol. It's a good one. GPTY, that's a good one. 32% yield. Carvani, SDTY, QDTY. Really, that EGGS, the EGGS could be a good comparison the EGGY, the yielding one, could be a good comparison for SDTY. They yield the same. Well, SDTY is a whole heck of a lot less volatile, though. They're totally different funds, too. I think Eggy uses monthly options, and I also think that they only pay monthly, and SDTY is using dailies and pays weekly. So, yeah, WPay would be a good one for Wednesday. If Howard can get killed to pay 30 to 40 with little NAV erosion, it will really challenge Alti. But Blocks is paying 30 or 40, and it might challenge Alti also. But Blocks is going to have tons of erosion, or Blocks will be tons of volatility. Erosion's not really what about Microsoft? Yeah, that's a good one. What about Microsoft? Hey, I hadn't seen you around here, but I can't even read your name. They're all drama. Anyway, what about Microsoft? I kind of specialize in ETFs that sell options. So when we talk about Microsoft, it's generally, we talk about the YieldMax one that's selling options on Microsoft. But, I do know this. I know that Microsoft has earnings. Is it next week or the week after next? I think it's the week after next. And not only Microsoft, NVIDIA, Apple, lots of the Mac 7 here in a couple of weeks. We'll know a lot more about Microsoft then. But We mainly are just option nerds here and talk about option strategies and stuff. All right, dividend sheet Jenner, what are you doing? You cover tech shares, but yields are lower and more downside, but upside is better. What are tech shares? Rec shares, yeah. Yields are lower. Oh, and there's more downside. I don't like to hear that, but upside's better. They only write options on half the portfolio, but they use leverage on that half too. So the leverage is a little bit of a kicker, and yeah, I could see that. Blocks is your Monday pay, huh? Well, it's a good one. It is darn sure a good one. Like I always say, Blocks and Alti are my two favorites right now at this point in time. They're the most hedge fund-like type funds. But there's other ones out there, GPTY, LFGY, SEPI. There's other good hedge fundy type things out there going where they can really be aggressive with their moves. Yeah, Blocks for Monday, WPay for Wednesday, and Alti for Friday. You got Monday, Wednesday, and Friday right there, right? You just can't spend any money on Tuesday or Thursday, though. So you have your money. I'm just joking. Round Hill's your Tuesday. Round Hill makes a good Tuesday. Yeah. Oh, yeah, just the Round Hill single stocks, but WPay is on Wednesday. But like if you had just like NVDW from Round Hill, it'd be a Tuesday. Yeah. Thursday's YMAX and Chippy. You could do worse than YMAX and Chippy. All right, ZZ, what are you saying? Okay, the only reason you can say that QLDY doesn't buy like 90 or 95 is probably that they only do. Oh, this is your idea on what's going on. Okay, that's a great theory. That is a great theory. But let me show you their positions. Their most recent position. It's a good theory, but their most recent position is calls that the strike price is 1,000 on the NDX. All right, and the NDX trades at 24,000 or something. So I would bet you. I would bet you these are like a 99 delta or really high delta because it's, the option costs $2.3 million or something. And these XNDs, this index is a tenth the size. So it's trading at 230, but this call is at 10 strike. So these are way in the money. These have got to be 99 delta. So all I'm saying is I don't think that's it. We need to come up with something. I need to come up with another theory, but I'll figure it out. I thought about writing Mike Coe an email, but maybe I should write Scott Snyder one. Scott wants to come on. Scott's been maybe thinking about coming on the station. We have to talk to Jay first, but maybe this could be something we could straighten out. If he came on the station and we'd sit down with a pencil and a piece of paper, and the other thing is, that would take up 5 minutes for us to talk about this. Then it'd be nice to have him on to ask him other stuff too, right? I guess. I mean, I'd like to have him on. Maybe Jay will let us have him on for 30 minutes, and we could just basically talk about QLDY and ask him a few other questions. Because Jay probably he probably has a lot of responsibility watching these, trying to get these fills in and out, and trying to get everything filled in a good price. And I'm sure this is hectic around their shop between 3 and 4, I would imagine. Anyway, but I'll find out something for you, ZZ. Anyone else that I influenced, I didn't mean to do that. I'm not trying to get you guys hurt. But I'll keep an eye. I'll get us an answer anyway. Like I say, and I don't care if people, if I'm the only one that has it and you guys hate it, that's fine. It's not really that ticker so much that I'm trying to specialize in. I think the lightning spread itself is the wave of the future. But I don't think someday people will go, back in the old days, my grandpappy, he used to sell covered calls. What an idiot, because there's better technology nowadays. And it's called selling a put spread. And at the same time, you own the stock. So it's like a covered call using puts, but it's not, but it's better. So anyway, I'm trying to specialize in all the subsequent funds that come out too. So if QLDY turns out to be a dog, that's fine. I'm about the lightning spread strategy as a whole. So check this out. Have you ever heard of CCL? That's Carnival Cruise Lines. That's not it. There's an ETF out there that does great, that runs lightning spreads and has since 2020. I can't think of the OVL. All right. OVL. So the lightning spread, there's OVL versus the SPY. It's designed to get all the upside of the SPY. I mean, that's the way it's supposed to work. And it's supposed to not impede the upside at all. I don't know what they're doing over there. This OVL only pays like a 6% divvy. So, I mean, and like I always said, the dividend's a tax on upside. If they paid a bigger dividend, they wouldn't track it so closely. But, and it's not only OVL, they have a whole company, these guys right here, and that's pretty much all they do. So it's not like the people don't know about it. Liquid strategies. lsfunds.com if you guys want to go check this out yourself. They manage 1.3 billion. All of these funds, OVL, OVS, OVF, OVLH, OVB, OVT, OVM. It's the same thing on all these. I did a review on these guys. They have different underlines, but they own the shares and they sell put spreads. The other reason why the reason why they only do it monthly though. And that's the reason they'll only pay like 6%. If they did it weekly, it would pay more like 12 and they would get full upside. And if they did it daily, I think it would pay more like 20 and they could get pretty close to, and get a lot of upside. Anyway, we'll see, but we'll see. But I've watched, in fact, I'm so interested in this it's a better strategy. And I'm so interested in this. I found the guy that owns this company. He has he was on a show for like an hour talking about all these strategies. I watched it the other night, but yeah, this, there's better. The covered call is, I mean, the covered call spread's all right, but the covered call, someday no one will do it anymore. Someday it'll be like whenever doctors used to put leeches on you. I'm telling you, you heard it here first. But they have all different things. They call it our flagship active put selling overlay strategy sits atop existing portfolios with the goal of providing enhanced return and income. These guys would go, that's what an overlay means. An overlay means they could go to like a rich family and they could say, let us manage your money. And we're going to, without selling any of your stock, we're going to provide an income for you. So what do? They sell monthly put spreads. Whatever income the put spread generates, they give it to the family or the family office or whatever. This is a rich guy type strategy. Same thing they also do that other people do with covered calls. So in a put spread is really a covered call. So actually a put spread is actually a caller. So even though it is synthetically kind of the same deal anyway, but I still think it's just a better technology. And anyway, but there's a lot of stuff on the internet about this. But yeah, these guys are good. This is the wave of the future. We're going to have a lot of lightning spread funds coming out. Especially, but they need to, unless other people like ZZ start to notice that this one isn't performing that great. Especially if they can get their act together on this QLDY. I don't know what the program is with these guys. It says QLDY directly bought deep in the money, naked calls. Yeah, instead of using synthetic option strategy. That's true. They did, but lots of people call deep in the money a type of synthetic. But you're right, it's not asynthetic. Asynthetic is a call, an at the money call, and a short at the money put. And then a combo is the same thing, but a combo can be different strikes also. But yeah, I get that it's not asynthetic. So maybe they should have done the synthetic. I mean, I'm with you on that. Meanwhile, the expiration date of the other 2 months, the time value is right. That could be because they only went out to December on that deep in the money. I think it's December 19th. So, that it's not eroding that much, but it is eroding a little bit. but those ones that are selling every day are eroding totally. The idea is they should be making more off the ones that the erosion from the daily options you're selling than they're losing off the deep in the money. But yeah, right now it's not working out for them. But no, that's a good theory, Cece. That's probably it. I think you solved it. That's a good theory. I mean, that's the best one I've heard so far. Like I say, we'll try to get these guys on the show, and so we'll tell them we figured it out, and we'll tell them what's causing it, and see what they think. I mean, another way to get guys on your show, I could make a negative video about it using that theory. You know, I could say one of my viewers has noticed this, and generate some content on this and show some underperformance, kind of gripe about it, and then I guarantee you they'd come on the show, because that's kind of Mike Coe's job. Whenever somebody's out there spreading FUD or misinformation, he shows up on their show, and he's like a professor. But anyway, but it doesn't mean just because he's smart doesn't mean we don't have a right to our opinion. But yeah, I'm with you, ZZ. I'll stay on top of it, especially since I'm kind of specializing in the lightning spread. But I was just trying to say it's more the spread itself. It's more the strategy, the strategy itself I'm interested in than that specific ticker. But anyway, all right, guys. I'm going to let you guys get out of here. Look, somebody just showed up. There's 21 people now. Wow, I just can't believe that. That's awesome. But I'm out of stuff to talk about. So I'll let you guys get out of here. Plus, I have to go get now I'm doing 3 live streams a day. Now I'm doing the lightning spread live stream every night at 9, and I gripe about it all day. Anyway, and I got that stupid freaking spreadsheet to contend with. I need to freaking erase that spreadsheet and start from scratch. Anyway, but I'll figure that stuff out, and then I'll be on tonight at 9. You guys probably won't be there, but I have a different crew that watches me at 9. But I bet you some of you will be there. Last night I think I saw Dividend Degenerate. I think I saw Froggy last night. Marcus, I don't know if I saw you last night, but I saw Mike, not this Mike, a different Mike was there last night. And then Mike from the Philippines was there. So anyway, I have kind of a night crew also. Okay, I didn't see your message, Mike, here. What are you saying? You've been reinvesting your shares in Alti, but you plan to use them to Yeah, I really like Maggie. Yeah, nothing wrong with that. I mean, Maggie, nothing wrong with JetQ. Nothing wrong with any of these. I mean, there's not really many bad funds out there. Can you think of a bad fund? I mean, Murney, and I'm not even counting Murney as a bad fund. It has a bad underline. I mean, really, the Global X funds are probably the worst funds I can think of, the ones that I would want the least, But unless you're Global X, if any of the ones that Round Hill and Yield Max are doing, in my opinion, and X funds, any of the ones we talk about here have a lot of potential. All right, guys, thank you so much. I appreciate you guys, and I will talk to you later. Have a good day.